Hello and welcome to another episode of the Digi-Tools and Accrual World podcast. As you probably listened to the last one, hopefully, you'll know it's a little bit different in the format and what we're doing on here. But as ever, we are joined by the wonderful Indi Tatla. I'll be bringing her in a second. But first, a shout out to our sponsor for this episode, which is Advanced Track, who are always moving the needle in how outsourcing is provided in conjunction with tech. And that's what we love about what they do. But as well as Indi, we also are joined by the wonderful Lara Manton today. And she brings a unique perspective from a bookkeeper angle. So we're going to be bringing her in a second. But first, over to you, Indi. How have you been? Anything you've been doing interesting recently?
I would say slightly interesting. My child is entering a new phase of independence, so it's not as adorable in its cuteness anymore. It's more like the fierceness. Really great, really love it, got to support it. But we did this sleepover and it was just hell for anyone that has children and lets them have a sleepover. Destroyed. I mean, I made everything look so amazing. It was probably like one of these sleepovers that looked like it was from a film because all the teepees and the beautiful lights and everything's so magical. I'd like everything set up for a spa. We learned how to wrap the towels in the way that the spa has them. And they loved it, don't get me wrong. Like I told you, Ryan, right? A murder mystery to start with. Then it was a bit of a spa. Then it was a movie. And anyway, everything destroyed, like chaos. And
Sounds like kids.
It's just kids, but also it's just a lack of sleep. It just destroys me as well. So they did.
Well, you were part of the sleepover. It wasn't just the
I was
girls.
upstairs in my room. God, no, they wouldn't let me do that. No, I came down at it was 11:30, 12:30, 1:30, at 3:30 woken from the 2 hours sleep I'd had. And I just was like, okay, the hammer needs to come down now.
Yeah.
Sleep.
Assertive Indi.
Children sleep with a whisper, mind you, because some of them were asleep.
Oh, okay.
So I would say, all in all, interesting experiment. Not sure, but it's for me.
Yeah, well, having a daughter that is slightly younger, I have all this to look forward to. So, I'm sure I'll be a bit more probably assertive than you and coming down at maybe midnight and go, no, that's it, enough. I can't handle this.
You try, but you have, you can't, it's other people's children. Where's the line? You can't just tell them off.
I would. And on that note, well, actually not really related to turning off, but Lara, I want to bring you in. Thank you so much for joining us for this episode and future episodes. I guess, do you have anything to comment on kids, or is it more not your area of expertise?
It's not my area of expertise, sorry. Apart from having been a teenage girl, that's as much as I can offer.
No worries. But look, we brought you in and you're going to be contributing on a relatively regular cadence here. So look, talk a little bit for anyone that's listening about what I guess your unique experiences and what I guess you bring to the table.
Yeah, so I'm obviously a little bit different in that I'm a bookkeeper. In the software, day in, day out, processing thousands of transactions a week. Been doing it for almost 15 years now as well. So kind of seen the evolution of some of this software, like obviously very, very early adopter of things like Xero, Receipt Bank, Dext, Free Agent, cloud-based software. And then now seeing that kind of next level of it. But equally, there's kind of not a bit of a fight back, but as bookkeepers, obviously there's a lot of software out there that's like, oh yeah, we're going to make you redundant. And it's like, yeah, no, thank you. We can work together. We can get some things going. I'm trying not to be replaced by AI at this stage.
Yeah, I think software, now AI, seems to be the thing of making everyone redundant, right? We don't have any future jobs to look forward to. But no, it's a very good point. But to be honest, I think this has been impacting the bookkeeping space for a lot longer, because when cloud came into it, that seemed to be talking about making bookkeepers redundant and alienated them for a while. And then they had to kind of pivot back and go, actually, no, we're empowering you to do more. And so I guess you've been fighting this fight probably a lot longer than us.
Yeah, I think that we kind of go through these phases, don't we, of kind of what do bookkeepers actually do? And I think at the first bit of Cloud, it was like, before Cloud, it was you went into the office, you did the data entry, you sat with your clients. And then it was like, oh, well, we're going to make that redundant because you can work from anywhere and they can have bookkeepers from anywhere. And then it sort of moved again, OCR, well, you don't need to be the one entering the software, the data into the software. And it's kind of now just pivoting slightly. What is the value of a bookkeeper? It's not a data entry clerk. It's not an admin person. What is the value that a bookkeeper brings?
And do you think, Lara, with the advent of AI, you're just fighting the same tide again to then say, okay, or actually, interestingly, from my conversation with a couple of bookkeepers recently, is it eating more now into the boundary of where the line between bookkeeper and accountant sits, because the tech is enabling so much more?
Yeah, I would say there's quite a few people out there that would say that boundary is a lot more blurred because we all have access to these tools, and with the qualifications and with the work that we do as bookkeepers now, apart from kind of the tax planning and tax advisory side of things, there's a lot that you can actually do as a bookkeeper. So I think more it's about how we then change so that we're assisting our clients with the software and using the software in the best way possible, assisting accountants as well to kind of be able so that you've got the data to do that next level of stuff. And also, from my perspective as well, working with the software companies to make sure that they're actually filling the holes and doing things in a way that a bookkeeper's going to want to use their pieces of software.
I wonder if this should just kind of eradicate the differentiation between accountancy and accountants and bookkeepers over time, right? Because there's always been that kind of differentiation, but we're kind of blending towards central thing. Or maybe even that the bookkeepers take on that whole control of the digital angle and how to deliver the finances in a really accurate and reliable way. And then you've kind of got this other role, let's call them the advisor, that then comes on and talks about it. Because I think accountants in their side, and what I keep talking about, is you're going to have essentially three different roles. You're going to have the digital expert, which is all about using the technology to deliver the compliance, deliver the figures, and then you have the advisor that ingests that and is really good at storytelling, communicating in an effective way. And then you're going to have the expert, which is the person that really knows the details in a specific sector or a specific area. And I think that across bookkeeping and accountancy, our roles are just going to kind of blend or transition into those three areas of expertise. But it doesn't mean I'm right. That's just my guess for the future. And I'm sure, Lara, we're going to end up debating this a lot on this podcast. So I'm excited to do that. But you're on here specifically, as we always come onto this show, to talk about app news. What's been, I guess, coming out over the last week or so. So, Lara, have you got anything to kind of kick us off this episode?
Yeah, so I think the big one at the moment is around Jenesys. And I don't know whether a lot of people have seen that actually it's in a little bit of a trouble space. It's been around for a couple of years, hasn't it now? Since 2023, I think they launched. And one of the key investors has pulled out, and there's a couple of others following suit. It's one of those where obviously trying to harness that early AI piece around the bookkeeping, around coding, reconciliation, all those kind of things. And I know they raised quite a lot of money at the beginning of 3 million, I think, but it looks like it's kind of stalled quite considerably. And I'm not quite sure what the future looks like at Jenesys at the moment. The software's still there, but whether it's going to be there for much longer or what the contingencies plans or whether they're going to have to pivot. I think it's quite interesting because it was sort of the first big name in the market, wasn't it, that just went all in on AI. And it seems like it's been overtaken by other, maybe not another app that does something similar, but by apps adding AI into their native offering. So I don't know what you've seen, Brian.
Well, no, I mean, from my angle, they were the first. And whenever you're the first in a space that people don't really understand, you spend most of your time and resource educating people. So you're basically going, this is why you should do it, rather than this is the software that solves a problem that you know exists. And so they end up, I guess, going through a lot of that burn, talking and over a longer period of time, going to shows, kind of explaining exactly what's going on, rather than selling the product. And that makes it a change for anyone that's early in the space. But I wouldn't call it a fire sale at this point, but it's definitely at that element of going, we need to sell quickly or get investment quickly. I think they very openly stated that they are helping others find alternative solutions at this stage because they are on a baseline of support. It's not going to be the quick turnaround. People have already said that what they used to get instant support. It's now taking a day or so to get an answer. They've had to kind of gut the level of staffing in there because they just don't have any money, and it's a shame. But I guess it's not like fully unexpected because, as you say, they were leading the light.
Can I ask, who is the ICP of a Jenesys type product? So who are they? Who is the heartland for this product?
I think it was people offering bookkeeping and data entry and that kind of support, but it was about bringing everything into one platform, wasn't it? So you had your reconciliations, you had your OCR, you had your document chasing, and it's great if you've got everything in one platform. If it works really well, you've got to be very careful of the people that have kind of differentiated themselves in the OCR AI document capture world. You've got to make sure that you're doing that to as good a level as they are, because otherwise, if you bring lots of parts that are almost there, you're going to really struggle against the apps that are separate but do it really, really well.
Yeah, and I think the other change that Jenesys had is they launched, I think even pre-launch, they had an engine, like version 1.0 or whatever they called it. And then they rebuilt it from scratch, again, the AI engine in the background. And then I think a year in, they did it again. And I think they were starting to build a bit of distrust in the marketplace of like, where are you sitting with this? And that may be what every other platform does. They just don't talk about it like that openly. But I think it indirectly created some distrust there. And then they had, I guess, the headwind of others in the market, established players in the market, throw a lot of new investment at kind of redefining, rebuilding their platform. Dexter's an example. We keep talking about it, but they just keep releasing new stuff. They've built AI into it. And so there's less of a reason to transition if the legacy player that you're on is already kind of filling the gaps around it. And it's not something we expected with Dex because they were acquired. The normal kind of path is to just cut in like the development and investment and take it on into we just make money out of what we got. So I think they couldn't have expected this would happen. They've also had others like Briefcase that have come in and challenged at the same time in exactly the same space with a different kind of model and go to market. And I think that's created some challenges for them. So I wouldn't say it's fully unexpected that this has happened. Do I think it's going to be the last AI-powered system that's going to kind of fall over or have to sell? No, I think this might be the start of what we're going to see a lot through 2026. Well, on that note, I guess I've got something that is similar, not 100% the same, but Botkeeper, which was launched 11 years ago, has also shut its doors. Now, if you've not really heard of Botkeeper, that's because they've not been massive in the UK. They're very much a US-focused operation. But they blended AI and people in the way they're delivering things. There was I'll call it a scandal. Scandal is extreme, but there was like an announcement, revelation, a discovery a few years ago that what they were saying or advertising as full AI was actually powered a lot by people in the background kind of doing things to resolve edge cases where AI can handle it. But by the end of last year, they had got to the point where the 80% of transactions were being processed effectively with a staggering 95% accuracy rating. 98% accuracy rating. I say staggering. You kind of now expect that stuff from AI to kind of get to that level because people just don't trust it if it's not. But they had a good piece of technology. People were surprised that this fell over because they built the brand, they'd established themselves, they had a community, but it just wasn't quite working for them. And what do they put it down to? Essentially, they're saying it's a mixture of kind of macroeconomic circumstances, which I don't know if it's just I don't know if that's just what people say when things fail. It's like, it's not us. It's just the economy, just things going out that's impacting us. But from what I guess you delve into, they've kind of said they were trying with concept fit. So what the system could do and deliver on against market fit. What's the market going to pay for? And they had to pivot and change a few times. And that, I think, impacted their growth that didn't sustain against the investment they achieved. And they'd got a lot of investment. And so it's been, I guess, a bit of a surprise, especially in the US market. I've seen a lot of people go, I was not thinking this would happen. Once again, similar to, I guess, Jenesys, there's been a lot of investment in AI. This was one of the first, and they've led the light, and I think they've suffered because of that. I mean, it'd be great if anyone else has got like some thoughts on this one, because I wasn't I was less expecting Botkeeper to fall over than Jenesys, to be honest.
I think on the surface, it feels like a tough market for AI first fintechs overall targeting accountants, and the maybe that's the vision is too bold for what they're trying to achieve. Like you said, 95% accuracy needs to be more like 4 nines of accuracy, which is the American way of saying 99.99% accuracy, and having maybe too little real world context, which is still something that needed to evolve. We're talking about something that has been alive for, was it 11 years that they're alive for? And that during that time, AI has rapidly changed. So I'm not really surprised they had this element of human interaction with it. And then don't forget, they lived through the fintech winter. So, the exodus that happened there and having enough runway to prove that you had sustainable revenue. So they've obviously taken a lot of doldrums on, and maybe this one, in the sense that, and I've got a couple of big stories coming up on how that's actually going to maybe be something that is the start of a pattern that we see in this whole AI ecosystem of businesses that have built on top of AI or used or leveraged AI. It's sort of like are we fighting the tide here? I mean, on the other side of the Atlantic, and I'm happy to kind of go on to it, is a very different headline. Fieldguide has just raised $75 million, Series C, led by Goldman Sachs, valuing the company at roughly $700 million and bringing its total funding to over $125 million, with participation from Thomson Reuters, Bessemer, and others in the space. Fieldguide isn't selling bookkeeping chatbots. It is selling, however, agentic AI platforms built into deep regulated audit and advisory workflows. So I wonder whether, as to the two that we've just spoken about, whether the gap there is not really about whether the AI was good enough or the use cases, but maybe that the workflow was not deep enough. And actually, they didn't continue expanding into that workflow. I mean, what these guys are doing is they're targeting audit and advisory workflows used by the top 100 US accounting firms and integrated into core execution tasks from planning to evidence testing. So there's a bit of a difference that, the companies that maybe struggle often try to do a bit of everything, replace some of the bookkeeping function, the accountant function of the processing of the raw data with like a limited structure, and scale with a revenue model that's low revenue per user. Whereas Fieldguide is selling capacity and compliance continuity, especially where professionals are under extreme pressure and auditors are facing talent shortages and regulatory complexity. And it's also a stickier value proposition in that space. So because it's complex, guess what else? It's probably more expensive. It's more expensive than the softwares that we've spoken about, but relative to actually a solution that could exist in the space, it's probably also a good cost saving and more efficient because it's taking something that is doing that first layer and it's still protecting the risk and the reputation of the company. So I think where we're seeing in the UK some fumbles because of oversold autonomy, Fieldguide seems to be getting the right alignment of capital by having existing professional judgment, traceability and oversight in the AI. And I think that's what is different here. I mean, AI in accounting that succeeds not when it replaces the expertise, but when it amplifies what they're actually trying to achieve in a workflow.
Your pronunciation is so much better than mine on the words, Indi. I love it. What I would flag is that the
I did
US
not
market...
expect that to be the compliment. Thank you so much, Ryan.
It's okay. I just get lost in the way you pronounce things, Indi. I have to try and actually think of what you said because I was just loving the cadence of your voice. I will comment in the fact that the US market is really struggling with resource in the CPA area, and so trying to create capacity by taking a lot of the mundane tasks off the hands of those larger firms by utilizing tech is going to get eyeballs on it, and the audit side and the advisory side are not areas that a lot of tech has gone after so far. I think we're going to see a lot of it through 2026. But we've not, it's been mostly around, as I guess Lara can comment on this, largely on the bookkeeping side. So, and on the tax compliance side. So seeing it in now going into the audit space where there is a lot of pain, there is a lot of change, and there's a lot of, I guess, frustration from CPAs that struggle, I guess, just with the workload that they have to do, the amount of hours they're doing in any given period. I think this has the potential of having good positive impact, hence why the most raise so much money.
Yeah, and I think that's the key, isn't it? They found their differentiator. What are they tackling? What they know exactly what they're going after, what that pain point is, and how they can solve that in a way that, as Indi said, sort of augments what the person is doing. So they're kind of giving them the tools to do that in a better way across a large firm that's probably servicing quite a lot of different clients on an audit perspective as well. So I think that's it's a new way to go, but I think that is the way that a lot of AI and these kind of tech need to go, is actually what is the pain point that you're trying to solve. And I think they've really nailed that down, and it obviously shows with the investment round.
And I'm going to build on this for a moment, and we're going to add a little bit of drama to this. We're going to start calling it SaaSpocalypse.
Well, you say the Sasquatch.
SaaSpocalypse. This week, Anthropic, the US AI lab behind the Claude family of large language models, shook the market as well by launching a new legal AI tool, or a plugin for its agentic platform, that automates tasks like contract review, compliance workflows, and document triage. So just building on everything that we're talking about here, this announcement triggered a sharp sell-off in European and global data and professional services stocks. So professional software stocks, should I say, from RELX and Thomson Reuters to Sage, our own Sage UK, Wolters Kluwer and Pearson. Investors feared that AI agents could undercut traditional data services and legal software business models. So the market reaction has been very dramatic. Shares in these data businesses that have been the incumbents for so long dropped on the belief that generative AI tools might disintermediate the workflows that have underpinned decades of revenue in legal and compliance and research and professional services overall. So I think where investors shift from seeing the AI as the tools that boost the software companies to viewing them as a replacement for them. This is something that I've spoken to a couple of people in this market about, a couple of accounting softwares in particular, who have also taken a very early view of this same thing, that AI disruption anxiety is real. And the reaction isn't just about some sort of like legal tech or compliance tech. It's a broader fear that AI agents could automate cognitive work traditionally done by specialists such as accountants. And just as Claude's legal plugins rattled the legal software shares, advanced AI tools that can interpret tax rules, audit evidence, or compliance checks could eventually threaten parts of the professional software stack built around these functions. And I think that we're going to see some huge consolidation here, maybe from market players, but also those that will consolidate around value and not just the automation alone. So those softwares, for instance, that already embed AI into their own products and they hold proprietary data, regulated sort of trust information and enterprise relationships, might be defensible because pure AI startups lack that, and they don't have the history and they don't have the information that can then keep them as defensible. So it might be an overreaction, but what do we think about this? It might be a dramatic overreaction for me to call it a SaaSpocalypse. I can't do that now.
I take it back. I take back what I said earlier about how your pronunciation, Indi. You've ruined what I said within the next section.
Can you say it? Say it quickly 3 times.
A Sascopolis. I can't say it. But no, I can never pronounce anything. So using me as evidence here is not good. What I would say is this feels insanely dramatic. And for that exact point that you make, Indi, it's all about the history, the data, the trends. everything that accountants do and what we learn is based on seeing things happen in the past and then kind of spotting it with a client and going, look, you are on this track. This is the kind of thing you need to consider. Everything is based on experience. If you just launch an AI model with no context, it can do something, but it's not going to do it that well. It's going to miss the anomalies. It's going to miss the context of the wider things that's going on. Having that data in any area and then overlaying AI over the top of it is going to make that so much more powerful, as hopefully we can prove over the coming months in little things that we're trying to do in digital disruptors. But yeah, I can't believe it's had that massive an impact. But as we're kind of going through in these conversations here, we're having tech companies fall over because they've said they can do things with AI and they can't do it. And now we're having huge releases on AI that's disrupting the market. Why is everyone panicking? I don't understand why everyone's just going like we're going to throw money at you or we're going to take money away because of just one announcement on it can do something. I think it's nuts. When is this going to stabilize again?
I think it just forces investors to confront how AI agents could reshape the value chain. And maybe that's not an immediate thing that will happen overnight. But I think that if you're an investor looking at it, you're probably just treating it as numbers on a spreadsheet without the same context. What I do think that I might do is, given that a couple of weeks back, Sage had announced some stonking results, and now we're seeing some threat from, and lots of people jumping off the ship, might give a second look to some Sage stock, if you ask me.
Maybe.
I wonder whether this is just the natural cycle that we're going through at the moment with cloud software or other things. Everyone jumps on the bandwagon, doesn't quite do what it says it does. People drop off. That next generation then comes through of what happens, where are we going? And I think that's what we're probably seeing with AI at the moment is, rather than it being a broad, we can use it across all use cases, it's going to change the world. It's actually, let's look at what it's doing on how it's doing it and whether that is something that is sustainable in the long term for building products and building growth. And I think that's probably what we're seeing, is that the apps that have got it right, or the tech staff and the fintechs that are getting it right and doing things that are moving the needle, are the ones that are moving forward, and the ones that are kind of all bravado but aren't actually backing that up with sustainable results behind the scenes are the ones that perhaps struggling.
Very well put, Lara.
So, talking about AI, US accounting platform Pilot has unveiled what it calls the world's first autonomous AI accountant. Apparently, it runs the system entire bookkeeping life cycle, onboarding, transaction coding, reconciliations, month-end close, financial statements with absolutely no human intervention. I think that's a very, very bold pitch there, isn't it? They're talking about faster closes, lower cost, audit-ready books, always on AI insight, and they've got a decade of Pilot's historical bookkeeping data for more than 7,000 startups. It promises finance that just works. For accountants, it claims to eliminate the grunt work and free them up for advisory. I think a bit of skepticism, a bit of cynicism there. We've just talked about AI bookkeeping platforms, two of which that are struggling or closing. This isn't a new entrant. It is well funded. It has been integrated in the US, but it does feel like they are overreaching here with some of this. I don't know about you guys. Obviously, again, it's a US-based platform, which is quite interesting that they're leaning very heavily on AI, whereas I think we're a little bit more, not reticent, but we're a bit more watchful around it, perhaps.
I think it's super interesting that it's, like you said, it's US based. We are an island. France takes a stance that it says, okay, you can't use Zoom or any US company. You've got to start using our own proprietary technologies to manage the data and keep that value within its country. And I think it's, because it's so US based and the US is really, it's leading the race, I'd say, in AI. So it's no wonder that they're going to really push hard and make big brash statements. And maybe you're right, okay, like they've launched this now, but I bet in 4 months' time when the models change, there we go again. We've got to scrabble around and fight. So again, it's just, we've got to keep on riding each wave as it comes. Interesting to see this one. Again, Ryan, what do you think? What's your gut telling you about this?
Well, number one positive, they've got 10 years worth of data. We're just talking about the fact that you need the history there, and they can train the model on history. They've got real world examples because they've had a brand and a process and a business for so long that actually it can add weight to the AI engine. Can it do everything they've said it can do from day one? I do not believe that at all. What I would say is maybe it can do a big chunk of it. It can do a big chunk of reconciliation work. It can do a big chunk of like processing. But if it's trying to say it does 100% of it, I think you lose trust. But let's put this in the context. They are being big and brash, and then the US based. Well, they're kind of following the leader to some extent, aren't they, with that? And then countries that aren't in the US are losing trust in anything that's said. That's kind of what's happening at a political level as well. So I think maybe this kind of marketing is alienating those businesses from anything outside of the US. So great. You kind of, there's this kind of hype bubble in the US at the moment that you have to say, they've always been brash, right? But this kind of emphasized. Everyone outside is going to meet it with a lot of skepticism, and it burns the brand to some extent. So I think great for trying to build and grow the US side. I think it's going to hamper them if they want to go global with their push.
And I wonder as well about that kind of the interesting thing about using the historical bookkeeping data from already within that system. It's great, but we're seeing maybe that's sort of prompted some of those Xero API, that AI clause is like, oh, hang on a second, where is this data can you connect up to this data to train other LLMs and other systems like Pilot? Or is it something that maybe some Xero are thinking about with the next iteration of JAX? Is it that they're kind of looking at what's obviously they've got big US base now with Sukhinder Singh Cassidy based out there? Are they seeing what's going on in the US market and thinking, oh, hang on a second, we could actually do that? Maybe to position their US offering more in a better way, but also actually what does that bring across the rest of that? Because as you say, Indi, it's that kind of US skepticism somewhat. If you've got other products that are already embedded across the world that we have trust and belief in, actually, if they start building these sorts of platforms, I'm not saying they're going to automate everything, but can we start to believe a bit more in that?
Look, you're talking to someone that's British Indian, so I've gone to India, and every Western brand has thought they can absolutely conquer India. And have they been able to do it alone? No, they have not. Every single time they've gone into a jurisdiction, India has absolutely booted them back out. So the point is, unless you have a way that embraces the country that you're going into, there will be resistance. And like you said, this is a good example. Will we only then trust these things if they come through the entities that we have already trusted a relationship with? And maybe that's more familiar, more predictable. We have something there, question mark. Could be the case, right? I think that could be the case. In this day and age, I think that might be the way to do it.
So I guess, you've got Intuit over in the US doing so much with AI, maybe not promising quite as much as what Pilot are promising here, but promising they're going to do a lot regarding automating processing, automating end of year or end of period close. So maybe Pilot have to be brash just to try and get some attention on them. But yeah, I could agree with you, Lara. I think Xero are going to do something similar over time. Obviously, we've got auto reconciliation. Sorry, Aaron, I'm going to call it reconciliation inside Xero, but we're going to start seeing this across all the other products as well. I've got something that, once again, we can't escape it, is AI related. Simpro Group have purchased the AI first platform Delight. Now, why is this important, I guess, for Simpro? Well, they've basically set out their sights to be the world's first and only AI first operating platform for the trades. Now, Simpro focuses on trades, and they're in multiple countries, and they're leading the light in many different areas. They've bought lots of other companies that are in this similar space. So they've got now the Simpro Group. And I guess underlying that or overlaying that with AI makes sense with what they're trying to do. We've talked about have been doing this for the project management in general, but with a trade focus now, if you can get AI powered in that, it adds a lot more power to the system because Simpro's been around for a long time, so it's got all that data in there. It's very hyper focused in a specific sector, so you get a lot of very specific focal points regarding how those businesses operate if you can get AI in the system. So this is pretty new. It's going to take a while to build the platform out inside Simpro to get the most out of it. But I think it's a good acquisition. Simpro seemed to go acquire rather than build and then join systems together. It will be interesting to see how well they do that. When I guess an AI platform normally has to be pretty embedded inside the system to work effectively. But yeah, that is the route they're going down. I think it's a good angle. We'll just see how effectively they can blend it. Will it be something that takes years, or will it be something that only takes a couple of months?
I think, again, that's the key, isn't it? How quickly can you embed that into your product?
Yeah, definitely. But I'm a big fan of Simpro. I've been working with them for many years, and their acquisitions I've seen in the UK and Australia over the last, I guess, 3 years have all been positive. They've made sense. This one, I don't know as much about. So I think it's going to be a more suck it and see kind of approach from my end. But yeah, I think it only helps and only bolsters what system does. If you're just now a cloud native system and you're not doing anything with AI, realistically, you are going to fall behind. So they have to do something, either build from scratch or buy. They've got another buy route.
So we've got some non-AI news for once this week.
Woo!
But again, about changes in the industry, which is that the founder and CEO of Buddy has stepped down after 7 years. So those of you that know Buddy, it's a payroll platform originally from Malta, but used quite a lot in the UK. On paper, this is a calm, respectful, orderly change, but it does signal something is possibly changing behind the scenes. Obviously, payroll is very fast moving. Software has to keep up with the changes, regulation heavy. And if you get it wrong, it's an absolute nightmare. So it's interesting that David stepped back, especially after 7 years of building that. And the other interesting thing is he's moving towards hospitality tech with the 16 Group. And I know hospitality payroll is a whole other ballgame with rotas, labour costs, compliance, obviously a lot of national minimum wage issues, all those kind of things. So it's interesting that he's sort of sideways, as it was, into solving a different area. But what does that mean for Buddy itself? Jonathan and the team are obviously still involved, but is it a move for them? Is it going to be a sale, a pivot, a build on what they've got? But I think it's quite interesting that you're seeing a lot of kind of payroll only items and realize that actually, yes, you've got to do it really but as more and more comes into software themselves and the payroll functions within various bits of software become better, is there actually the space for that standalone software payroll offering?
Yeah, I completely agree. I mean, what more and more systems are starting to move towards is that embedded HR payroll solution. And I know Buddy kind of doing that on a very basic level. But the challenge we've got is that they're kind of going as a payroll bureau to market in the UK at least. And their angle is not a differentiator, I guess, against the systems out there. It's going, you're going to have to move away from traditional into cloud. If you're going to do that, look at us. I don't think it's a bad thing to do, but it's hard to get traction and trust in an area which is the highest risk for any accountancy firm or payroll bureau, is the fact that it has to do it right. It has to do it right. And I think that is where they like to see someone that's been around the market for longer, that's kind of built that brand. So it's always hard to build out and grow and scale. And maybe this is the result of that, or maybe he's just got fed up working with payroll bureaus. I could understand that, love you payroll bureaus, but having had to convince a payroll team to change system is been one of the most painful experiences of my life, because generally You just don't want to. You're churning things out so quickly. You need to know how it works. You don't want to go through that pain of change with the risk that's associated. So people just like to stay on legacy systems. Payroll I think, are the department inside an accounting firm that's usually the ones on the oldest systems. It's a challenging area to fight in.
Well, let's speculate on that one, shall we? That watch this space. It could just be that Jonathan himself is the right person to lead the charge on this, because he's been dealing with more of these payroll bureaus, and what we're seeing is just like a changing of the guard, but actually not same. But I think there is a really interesting point about whether it can stay standalone for a long time, because as you said, Ryan, we do see some of these payroll softwares and they've started to expand into things that are more HR related or adjacent markets. And we see that with our Employment Hero, who are doing a lot more targeting on payroll bureaus, and also HR. And they're probably, at least able to still stand up to market competitors. But there's been a lot of, again, acquisitions of payrolls and consolidating with HR. So it's interesting that Buddy is still payroll.
We'll have to find out when the red panda comes to the next event.
Exactly.
Yeah. Oh God, stiff of the tongue, red fox. There, that'll be the most insulting thing to them, I think.
I've got one thing that is slightly different, and again, it's a reverting back to something that's a little bit just non-AI related, but very helpful feature. Expend have launched a new automatic document matching. So it auto-suggests matches between uploaded documents such as invoices and expense transactions. So they made a couple of adjustments there, nifty, useful changes, and also their reimbursements feature, which was launched, has seen a lot of great traction. So now it will be a premium feature.
Oh, okay. So they've gone from here's something we've built out, and here's something we're now going to charge you for. Is that what the announcement was?
Mama's got to make ends meet. They're launching something good for a limited time. This new feature is going to be free across all the plans. So I guess what they're doing is saying, okay, how much is this being used? And then if it is being used, let's charge you for it. But the fee, it sounds like it's a small percentage of the reimbursed amount. So it's capped at £1 per reimbursement. You can still have a seamless reimbursement experience in the Expend Everything plan, where it remains free.
Yeah. Well, if you're a software vendor out there and you're not sure how to announce you've got a price change, I think you start with "Mama's got to make ends meet," and you'll be fine. I think that's the go-to-market wording you need. Well, apart from that, I'm not sure I've got any specific comments, but I do have something to wrap up this episode, and it's not tech-related. I know we talk about too much tech on this podcast, don't we? Let's bring something that's much more important to the fore, and that is that a business that offers hair loss replacement systems have now convinced an upper tribunal that its supply should be zero rated for VAT purposes, which is quite interesting in itself for us follically changed people. But it's because social factors mean baldness could be considered a disability. Now, that is something that is very important, because I've been saying it for years that, we suffer as the follically challenged people of this world. You've got all this protection from the elements, you people on your high horse with hair, whereas we're just exposed. We feel it instantly. And so, I think, it's good that there's been some recognition from the upper tribunal on the fact that, the social aspects could mean that baldness is considered a disability.
That's hair-raising news.
That is discriminatory. I don't feel you should use that terminology around me
anymore.
I
feel as multi-follicle stranded people have a difficult time understanding what you're saying. So
you
can you summarize it in like one sentence?
What the discrimination we feel on a regular basis? Is that what you want me to? It's I think it's because, like you say, you don't understand and you can't comprehend what it feels like, and so terms like hair raising, it's just offensive. You should really be very careful about the wording and terminology you use around us follically challenged individuals.
This is why you deserve to have some sort of tax break.
Yeah, I think so.
Yeah.
I think that's how it should work. And I mean, and I'm not saying that we should. I'm not saying I are stating this. What I'm saying is the upper tribunal are saying that this is what should happen. And so, yeah, 0 rated. And good on them. Good on them.
I think it tells me that there is a very persistent approach that's taken by the follically challenged. They just, like dogs with bones, don't give up.
I was going to say cynically, how many of the upper tribunal are follically challenged?
Oh, I can't believe we're throwing bias in here. This is quite clearly an independent assessment of the highest level. And I guess the summary of this, like why did it happen? And there was multiple different reasons. HMRC had kind of this business had put through that this should be 0 rated. HMRC had gone and said no, it shouldn't. There is no legitimate reason. It is not a disability. And then that the thing had been overturned, and the business had gone, no, definitely should be. We want to appeal this. Went to the upper tribunal, and essentially the argument was, yes, on a physical basis, it can't be classed as a disability. But HMRC have not considered the social considerations, the mental aspect of this when assessing whether it's a disability or not. You can't just talk about physical disabilities and mental disabilities that need to be considered as well. And I'd never heard the term before, but social-based disabilities as well. So I feel that this is something we should all be very aware of, and has absolutely nothing to do with technology whatsoever.
And this is why AI is taking over. This right here is exactly why AI needs to take over.
If you replace me with a AI model that has hair, I'm going to be very offended. That should not happen. We need a broad range of people and disabilities.
Representation. I like it.
Yeah, we need representation.
Any given week, whether it's like you're follically challenged is something that you're saying is DI, is it a disability? I don't really understand where it fits, actually. It's like, it seems to tick every single box is what I think.
What I love is I've actually got you saying, instead of bald, follically challenged now. I think that's an achievement.
I'm going to say it, 100% follically challenged. I'm changing my language. That's completely it.
Well, if that's something I've achieved today, then I'll take that as a win. And on that note, let's bring App News and the podcast to a close for this week. Thank you, Indi. Thank you so much, Lara, for the first time co-hosting on this episode. I'm sure we're going to be hearing from you a lot more, especially if anything is bookkeeping related, because you've got unique insights that we do not have ourselves. If you do not at this stage follow the Digital Disruptors on LinkedIn, please do so. You can now catch the newsletter directly within the LinkedIn platform rather than subscribing separately. And keep an eye out, because we'll be making some big announcements about the Digital Disruptor Awards 2026 over the coming weeks and months. Hopefully we'll catch you there or on the next episode. Thanks so much. Speak to you soon.